What is good, everybody? We are going to be going over SMT divergence today. We still have a lot of videos to get filmed for this series. But again, this is going to be another continuation confluence. And again, or you can use it as a confirmation for price to be going in the opposite direction, especially after a liquidity sweep, correct? We've already went over a liquidity sweep. We already went over multiple other confluences. And I'm pretty sure this is the last confluence we are going to go over. And then we'll start going over daily bias, risk management, psychology, all that stuff coming into the next couple videos, okay? So I want to go over SMT divergence in this video. I'm going to try and make this as simple as possible. I already have the definition. I already have the stuff I want to show you guys through the drawing, so I don't have to draw it out in front of you guys and girls, which takes forever. I already got everything all planned out, and then we'll go into the live markets. I already circled out the live examples that I want to go over, and then we'll send you guys and girls on your way again, and you'll do what I tell you guys and girls to always do is go back and back test this. Go back and study it. Go back and identify what an SMT divergence is so you get it in your mind, so once you start trading in the live markets, you'll start to already see it, and then you can work your way around when we start going over the strategy creation and stuff like that on how these confluences and confirmations and stuff like that work towards the strategy you are trying to develop, that you are going to try and develop to yourself, correct? A strategy that I am teaching, you're going to start seeing the confluences differently than other people. I want you to start to just develop your own system off of these confluences, not build your own strategies. What I'm going to say is you're going to see these confirmations. You're going to use them to your advantage. We all have different risks. We all have different emotions. We all have different ways we see the market. But again, once you start using these confluences and you go back and back test them and you're more comfortable with using certain ones, you'll start to develop your own system over time and take what trades are more comfortable for you. And you'll start to understand that once we go over more psychology and strategy creation and stuff like that in the future. So again, we're going to be going over SMT divergence in this video. Let's jump right into it. I'll give you the definition, show you the drawings and stuff like that, show the examples in the live market, and we'll send you guys and girls on your way. And you'll start back testing it and studying it every single night until you understand and see it in the live markets and know what an SMT divergence is, okay? All right, let's jump right into it. Okay, so here's the definition. I want you guys and girls to write down in your notebook, okay? So SMT divergence is when two correlated markets like ES and NQ, correct? We're using this with ES and NQ. This is all I use it with. I'm not sure if you can use it with any other markets. I'm pretty sure you can only use it with ES and NQ. Don't mark my words on that. I use it with ES and NQ, okay? So again, it's when the correlated markets like ES and NQ disagree. One makes a higher high or a lower low while the other fails to do so. That disagreement tells me that smart money is likely to shift the direction, and it helps me confirm my bias before taking a trade, correct? So again, write this down real quick. I'll help you understand this a little bit more after we write it. So again, we're going to delete this real quick and then we'll go on from there, okay? So coming down, I already have the drawing set for you guys and girls to understand what a bearish SMT is and what a bullish SMT is, okay? So we're going to go over a bearish SMT. As we can see, we have both markets, NQ and ES. Let's go over these two first, all right? This is going to be our first example. So an SMT divergence is showing us when price makes, so let's say this red line right here is our hourly high or our 4-hour high or draw on liquidity. We already know what liquidity is, correct? We could see price action comes up. We're in a bullish trend. We could see over here NQ. NQ ends up not taking this hourly high out, correct? What do we see over here on ES? We could see that we're forming higher highs and higher lows, correct? We're moving in an uptrend. And we could see that ES ends up taking out this hourly draw on liquidity. We can see that NASDAQ formed a high and a lower high, correct? So what does the downtrend move in? Lower highs and lower lows, correct? We could see that market is showing us an NQ that the market is probably going to continue in the down direction, correct? Because we didn't come up and take out that hourly high, but ES did. It's showing us that ES is lagging behind NASDAQ, correct? The NASDAQ would be the leading index to the downside right now, and we can use NASDAQ as either a map or enter our trades on that where we have the potential to continue in the down direction, right? And we could target our draws and liquidity down below, and even all this resting low resistance liquidity down below that we could target too, correct? So again, why is this an SMT divergence? Because NASDAQ comes up, doesn't take out this hourly high. We form a high and a lower high, right? So we would mark from the most recent high to the most recent lower high. I have the tool already set over here, so we're going to put SMT. So we could see NASDAQ formed a high and a lower high, correct? And then ES forms a high and a higher high. So what would be the leading index to the downside in this case? It would be an NQ, correct? Why? Because we didn't come up and take out that hourly high. We see ES did, right? I made a video back in the 2.0 that I take my trades off of the lagging index, but I've been starting to take it off of the leading index because the leading index tends to take out that draw on liquidity we want to target first because what? It's leading to the downside, correct? So again, it matters on the setup, but I prefer now to take the leading index trade because again, the leading index tends to take out that draw on liquidity quicker because it's the leading index to the downside, correct? So again, in this case, NASDAQ would be the leading index to the downside because we formed that new lower high, correct? So coming over to the other example, right? And this is a bearish SMT, right? We are in an uptrend, but if we see a bearish SMT, we're looking to take a trade to the downside. So if we X out these two options right here, let's X these out, these examples. Let's go over these two examples now, okay? Okay. Jeez, sometimes I get ahead of myself and I talk too fast, so just bear with me, okay? I'm going to slow down a little bit. As we can see, in this instance, we have NQ. We're moving up, right? We're in a bullish trend, forming higher highs and higher lows, right? ES over here, same thing. What do we do over here on NASDAQ? We end up taking out this hourly draw on liquidity, right? What does ES not do? It doesn't take out this hourly draw on liquidity, correct? So what would be the leading index in this case? I'll give you a second. It would be ES. Why would it be ES? Because we formed that new higher low, right? NQ came up. We came up and formed that higher high, taking out that 1 hour draw on liquidity. And then ES doesn't take out that hourly draw on liquidity, showing us that price has the potential. We're not just going to enter off of an SMT. We use our confirmations, our continuation confluences, our fair value gaps, our break of structure, our equilibrium, order blocks, which I'm probably not going to go over so we don't confuse you a little bit. We'll make our own separate video on order blocks. But again, we use our continuation confluences to identify if price is going to continue in that direction. We scale down to the lower time frames and identify if price is going to continue in that direction. And then we target our draws and liquidity once we see that those confirmations or continuation confluences are getting respected, correct? So as we can see, ES ends up forming that new lower high, doesn't take out that hourly draw on liquidity. In this case, ES would be the leading index to the downside. I would most likely look for a trade on ES, but again, you still could take it on the lagging index. It matters if you get a better setup over here on NASDAQ compared to ES, but we're overall going to be targeting the same draws and liquidity. And if the move for the day is bearish, you most likely would hit your draws, especially if you're targeting all this low resistance draws and liquidity, or if we have a 4 hour low down here or a previous day low, something like that. We start by seeing that we form that SMT off of that hourly high. We scale down to the lower time frames. We look for our confirmations, our continuation confluences. We look if those get respected, and then boom, the probability of our trade is more likely to play out to the downside. And price is going to most likely continue down because, again, we see that SMT divergence form. NASDAQ swept out that hourly high. That's what we were looking for, but ES didn't. We can see that ES is showing us, it's like a map, that price has the potential to continue down. We look for our continuation confluences, and we identify if price is going to continue down. But again, this would be the first step of identifying if price is going to continue in the direction we want it to, okay? Cool. Let's go over a bullish SMT. So it's basically going to be the same thing, but when we take out a 4 hour low or an hourly low, previous day low, whatever, our draws and liquidity, correct? So same thing we're going to go over. Let's go over the first example. We have NQ and we have ES. What do we see on NQ? We see that we are in a downtrend, right? We're creating lower lows and lower highs. We come down, let's act like this is a 4 hour draw on liquidity, this red line. We come down on NQ, we sweep out that 4 hour draw on liquidity. We look at ES. What does ES not do? ES doesn't sweep out that 4 hour draw on liquidity, correct? So what can we assume here? NASDAQ formed a low and a lower low, taking out that 4 hour draw on liquidity, but ES formed a low and a higher low, right? Showing us that has the potential to continue in the what? The up direction, correct? So in this case, what would index should be leading towards the upside? It would be ES, because what? We formed that new low and a higher low. What does an uptrend move in? Higher highs and higher lows. What does a downtrend move in? Lower lows and lower highs, correct? NQ is forming that lower low. ES is forming that lower high, or that higher low. So in this instance, ES would be the index that I would most likely want to take the trade on. Again, you can take it off the lagging index. It matters what setup looks best, right? Whatever the continuation confluence is respecting. But again, both markets are probably going to continue up in the bullish direction. But again, does that mean it's going to happen every single time? No, we're going based off of probability. This is just a confirmation to identify that, hey, price has the potential to move up here. And then we're going to use our continuation confluences to identify if it wants to continue up and make the probability of our trade to play out even higher, correct? There you go. There's one example for a bullish SMT. Let's X this out, and let's go over the other example now. So let's say NASDAQ in this case. NASDAQ comes down. We don't sweep out this 4 hour low. But what does ES do? It comes down and sweeps out this 4 hour low, correct? For there to be an SMT, guys and girls, one of the indexes has to be lagging behind the other, and the other one has to show us that it's going in the opposite direction. If NQ comes down and sweeps out this 4 hour low also, there is no SMT. Remember, one index has to form that lower low, low and lower low, right? So we formed a low and a lower low, and that low and higher low, correct? For a bullish SMT. For a bearish SMT, we have to form that higher high and higher low, correct? If there's a higher high and a higher high, right, like this, there's no SMT. We got to remember that, okay? Write that down in your notes. So again, as we can see here, the leading index, in this case to the upside, what would it be? It would be NQ, correct? Why would it be NQ? Because again, we formed that new higher low, correct? It's showing us that we have the potential to continue in the up direction. And then what do we use after that? We use our continuation confluences to identify if price is going to continue higher. And we see, hey, it's respecting our fair value gaps. It broke structure to the upside. It's respecting equilibrium. The probability of our trade is going to be higher to play out. Does that mean it's going to play out 100% of the time? No, I'd be lying to you if I said every trade is going to play out 100% of the time. That is not trading. Sometimes A+ setups aren't going to work. But again, we have our low resistance draws and liquidity that we could target coming up. We take our trade. We got this high. We got this high here. And then we got this high here also, right? And then let's say we have a 4-hour high above or something like that. We see our confirmations get respected. We take our trade. We target those draws. And then the probability of our trade is a higher percentage of playing out because, again, we identified that, hey, we swept out that 4-hour low on ES. NASDAQ showing me wants to continue higher. We broke structure on the 5-minute time frame. We scaled down to the 1-minute time frame. We had a fair value gap fill, equilibrium fill, and we broke structure on the 1-minute time frame. Everything's showing me that price wants to continue higher and react off this draw on liquidity. Then we understand what an SMT divergence is. Okay? So we're using an SMT divergence to identify if price has the potential to continue in what? The direction that is opposite of, again, taking that draw on liquidity. We have to use it off of a draw on liquidity. We usually don't use SMTs off of if we don't take out a draw on liquidity, correct? Again, you still can, but again, even if you're taking out a 5-minute low or a 5-minute high, you usually want to wait for an SMT. Sometimes I use it off a 1-minute low, 1-minute high. Then I wait for my break of structure. Again, I usually like using SMTs off of a draw on liquidity because they tend to not play out when they're not being used off of a draw on liquidity. Price ends up continuing in the direction usually and retaking out that high. And then once that high or low has been taken again, after forming that SMT, I usually disregard that SMT and don't use it anymore. All right, so let's go over the live examples. Again, I'm going to have to use both markets here, so I'm not going to be able to go on the full screen, but I found a couple examples on the hourly time frame. What time are we looking at? We got 11:40. I got practice at 12:30, so I got to leave at 12. So again, that's why I'm a little bit in a rush to get this video filmed. I'll probably edit it and get it posted up later. So whenever it's posted, it'll be posted. So we're going to go over on the hourly time frame. We're going to go on the hourly time frame. We're going to look at 3 examples that I marked out before this so you guys and girls can understand what an SMT is in the live market. So let's go over example 1. We could see price comes up. What do we form here? We already went over highs and lows. We should already be past that part, correct? As we could see here on NASDAQ, what do we form? We form a high and a higher high, correct? Right? In this instance, we're going to use this candle as a high, just for an example, right? This candle closure, I'm going to consider it a high, because again, I want to use this as an example for you guys and girls to understand, correct? So look, we form a high and a higher high here on NASDAQ, right? And we form on ES, and then we form a high and a lower high over here on NASDAQ. So this is ES, this is NASDAQ. What market is showing us that we have the potential to continue down? The one that creates the lower high, correct? So over here on NASDAQ, here's our high to our lower high. And then what do we have over here on ES? We have our high and our higher high. As we can see, look, 9 a.m., 9 a.m. Where's the other candles high? 10 p.m., 12 p.m., 12 p.m. All right, you got to make sure they're in the same time. You can't just have an SMT, one of them's at Tuesday at 3 o'clock and the other one's at Wednesday at 5 o'clock, correct? You got to make sure they're the same high. So look, as we see, NASDAQ forms a high and a lower high. ES forms a high and a higher high. What do we have the potential to continue in? To the down direction, correct? We swept out all these draws in liquidity right here. We have all these hourly draws in liquidity right here. NASDAQ, ES already swept those out, but NASDAQ did too. So we're reacting off of a draw on liquidity. We formed that SMT divergence. What is the leading index to the downside? NASDAQ. But we could see both indexes end up continuing in what? A bearish trend, right? But we'd scale down to our lower time frames and use our continuation confluences to identify if we're going to continue in that direction. But as we could see, in this case, we end up continuing in a bearish trend after forming an hourly SMT. We break structure in the hourly time frame. We form an hourly fair value gap. Price even comes back up, retraces into this hourly fair value gap, and we continue lower again. So again, what you guys and girls should be doing is going back in your trading view, your FX replay, and identify these SMTs. I go to market open to make it easier instead of just going back in the charts and trying to make it harder and trying to figure out what time this is. And again, that's why I did it before I filmed this video, because again, it can be a little bit more confusing, but just go to market open. Practice market open. See if you find any SMTs. Mark out your draws on liquidity. See if NASDAQ sweeps and ES doesn't. And then we start continuing the up direction. You know what I'm saying? So let's go over another example here. So I have this other one circled here. All right, what do we have? We could see ES forms a high and then a higher high. What does NASDAQ form? Again, a high and a lower high. So in this case, what would be the leading index to the downside? It's going to be NASDAQ, correct? Why? Because it formed that lower high. We could see ES formed a high and a higher high, coming out and taking out this high. It takes out this hourly draw on liquidity. And NASDAQ over here, we formed that high, but do we come up and take out this most recent high where this hourly high was, where ES took out? No. So again, NASDAQ forms that high, then lower high, and since it formed that, that is the leading index to the downside. You can see we ended up having a new weekly opening gap here, but again, as you can see, price continued in what? In the down direction. You get what I'm saying here? This stuff works, right? But again, we're not just going to enter off of an SMT divergence. We're going to use our continuation confidences to identify, to make the probability of the trade of playing out even higher. And I said that 10 times already, and I'll say it even more. But again, I'm just trying to help you guys and girls understand this, okay? So we have one more example over here that I marked out in the live charts. So now we have a bullish SMT example. We went over 2 bearish. Let's go over 1 bullish, okay? So what do we have here? We have this hourly low, right here. Let's even mark this one out. Let's go hourly low right here, and then we have an hourly low right here. Look, this hourly low is at 9 p.m., Sunday the 25th, Sunday the 25th. What is this low at? 4 a.m., Monday the 26th, okay? What do we have here? We have NASDAQ forming a low and a lower low, sweeping out this hourly draw on liquidity. And what does ES do? We have a low and a higher low. So what would be the leading index to the upside? It'd be ES on this case, right? Because we're forming that low and that higher low. NASDAQ formed that low and that lower low. NASDAQ showing us it might have the potential to continue down, but we sweep out this draw on liquidity. ES doesn't. And what does ES do? It forms that higher low. What does an uptrend consist of? Higher highs and higher lows. That's showing us that price has the potential to what? Continue higher, and ES will be the leading index on this case. So what would we do? We'd scale down to the lower time frames. We can even wait on this hourly for this hourly fair value gap to get inversed. And what does price do? It skyrockets up. Okay, this stuff works. But again, we're using the SMT as something to identify if price has the potential to continue in the opposite direction after sweeping out that draw on liquidity and move in the intended direction we want it to, correct? Understood? I think I explained that pretty well. I tried to dumb it down as much as possible. SMTs were something that took me a little bit of time to understand and learn. But again, guys and girls, this stuff is going to take time. It does not happen overnight. It takes time. You need to study, you need to learn, and it's part of just trading in general. It's gonna be like you're looking at candles and you don't understand shit, okay? And I'm gonna be honest with you with that. But over time, when you just keep getting the repetition in over and over and over again, you start to understand these things and you start to see them better in the markets and you get more market experience. You need that market experience to become a better trader. These confluences and these confirmations and everything I'm teaching you in this series is going to show you how to identify, to read the markets, to understand the markets, to see where they're going, and overall have an idea of what you guys are doing to get into these trades and not, okay? So again, hopefully this video is helpful. This is SMT divergence, guys and girls. Go back, get your notebook, go back and study it, understand these, try and identify them in the markets. What I would recommend doing is marking out market open, identifying your draws and liquidity, and see how price reacts off of those draws. Identify which market is leading, which index is leading, and again, just go back and watch the video again if you miss out on what you don't understand, or write it down in your notebook and stuff like that. But just remember, find the leading index. I prefer to take the trade off of the leading index now. Sometimes I'll take the trade off the lagging index, but it really matters. But again, the dogs are about to bark. Like and subscribe. I appreciate everybody who pays attention to my channel, and hopefully this makes sense to you guys and girls, and we'll keep these videos pumping. All right, peace out.